Hi guys, how's it going? Have you guys considered home ownership, but you're worried about the down payment, or quite frankly, you don't have it? I mean, let's face it, guys, an average price of a property in Southern California in today's day and age is over $500,000. A lot of people also think, man, how am I going to get 20%? There's no way I can save $100,000 just for a down payment on a home. And it just doesn't make sense if I were to put a little bit of down payment with the mortgage insurance and all the other fees that are associated with it. It's just not going to make sense. Well, I'm here to tell you guys that you're wrong. In fact, home ownership, as I mentioned in one of my previous videos, can be one of the fastest ways and surer ways to generate wealth. If you hadn't seen the video yet, go to my YouTube channel and watch Why Become a Homeowner. But more importantly, I wanted to overcome the biggest objection that people have when they're buying a home. And especially if it's your first home, the biggest problem can be the down payment, especially if you're not aware of some of the hidden tricks I'm about to show you guys. So stick around, let's jump right into it. It won't take too long to go through this, but I do want to let you guys know that you do have options when it comes to home ownership. And more importantly, the down payment that you guys are so if you guys hear that little thing meowing, it's actually my cat Kobe. What up, Cubs? He's very vocal. He just woke up from a nap. Kobe, as you can imagine, because I'm a Laker fan, and he's a black mamba. Say hi, Kobe. What's up, Kobe? Sorry, guys. Tangent there. So yeah, let's jump into it here. Okay, guys. So it shouldn't take. Oops, sorry. Bear with me. All right. So the main question: what if I don't have 20% down payment? Well, guys, there's three options for you. There's an FHA program, which is most commonly known as the first-time home buyers program. I'm going to teach you something. It's not. You can actually use it multiple times. There's a VA program, which I'm going to dig into, that's more for veterans and military members. Also, a little known thing that most people do not know, there are down payment assistance programs by the county. So there's government funding available for you if you qualify, which I'm going to talk about, in which you can pay minimal down payment. So let's get into it. All right, FHA, 3.5% down. So basically, there's some rules here, so let's talk about it. This is a federally insured program with a low down payment option. So instead of 20%, you can come in with as little as 3.5%. So somebody in Southern California, this can make a big difference. So the property, here's the rules. The property needs to be your primary residence 2 out of 5 years. And you have to move in within 60 days of buying the property. So it can't be an investment property unless you turn it into down the road after the 2 years. Also, there are limits. So you have to stay, I did San Bernardino and Riverside here. This is for 2020. So the FHA limits are $442,000 in those, San Bernardino and Riverside. LA County, a little pricier homes, so it's $765 for the FHA 3.5% program. In San Diego, I went to San Diego State for somebody that may or may not know, and I still am active in that market. $701,000 as well. So the things you need to consider with an FHA loan that are different from a 20% down payment loan is the mortgage insurance premium. Upfront MIP, that's what they call it, MIP, is 1.75%. Now that amount can be rolled into the loan. As a lender myself in California, I do have assistance programs in which I can offer you guys closing cost assistance as well as assistance on that extra 1.75%. Just shoot me a direct message. We can talk about that later. Also, another thing to consider is the annual mortgage insurance premium, which is just under 1% that's tacked on top of your monthly payments. So it's added to your monthly mortgage payment. Now, a lot of people are worried, man, this is really costly. I don't know if this makes sense. Guys, in my last video, I talked about home ownership and appreciation ranging from 3 to 10% per year. even at the minimum of 3% on a home value of 500,000, that's 15 grand. 0.8% is less than $5,000. So you're basically paying $4,000 to $5,000 a year to make 15, right? So those are things you really need to consider, not necessarily just the dollar amount leaving your pocket every month. Cool thing with FHA program, a lot of times people think it's for first-time home buyers. This program can actually be used multiple times, but you can only have one FHA loan in place at a time. So let's say, for example, you buy a home and you use an FHA program, you wait 5 years later, you still don't have a big down payment, but you have equity in your home. So a lot of times people just take that equity and move it into the next home. But if you still wanted to keep a low down payment, you could still do that as long as you sell the property and then take that FHA loan into the new property with you. So that is a little tip there not a lot of people are aware about. Okay. So the VA loan, this is for active duty, which 90 days or more of active service, and military veterans. So this is truly a 0% down program. It doesn't include closing costs, which again, as a lender, I can help out with that. For the VA program, it must be owner occupied. You have to have an honorable discharge. So we will take a look at your DD 214 paperwork to ensure that's the case, and you must have a certificate of eligibility to qualify for the VA, which I think you can get it from your VA office. Just your Veterans Affairs, you can call them and they can help you out with that. Same thing with the VA loan. It's not just a one-time thing. You can use it multiple times, but there can only be one loan in place. So just like I mentioned with the FHA loans, this could be a great opportunity to acquire multiple properties. You can always turn an old property into a rental property. That's how I talk about building passive income and retirement. Videos will come later and you can check them out on YouTube. So that's the VA loan. Now this is a really cool one that not a lot of people talk about. This is the down payment assistance programs. I put here the Housing Authority of County of San Bernardino. That's primarily where we work. The HACSB is where you're going to find them. Here's the thing, guys. Down payment assistance programs vary from county to county. The cool thing is that they can supply you with up to, I think 4 or 5% of closing costs, meaning that you only come to the table with as little as 1% down. So a $500,000 purchase price, $5,000 down payment. See, now you guys can see the different options that are available to you. Rather than trying to save that $100,000, here's an opportunity to jump in the game, earn home ownership, build equity, participate in appreciation through these programs. Now, the money can be used for down payment and closing costs, as I mentioned. There are stricter rules that apply, some higher credit scores. A lot of times you can't be it's more for new homeowners, not people who are current homeowners. And then usually there is an income limit. So if you have any questions, you can reach out to me directly. I am aware of the Southern California market and the different counties. And we could talk about getting you to the place to apply and see if it could work for you. So those are the three options, the FHA, the VA, and the down payment assistance programs. Again, guys, now more than ever, it's important to become a homeowner, to start building that equity, build a future for yourself, start building wealth for you and the family. If you have any questions, go ahead and comment below the video, shoot me a direct message, and I look forward to working with you guys down the road. Take care.